Welcome back. You're tuned in to Bazaar Morning Call. As promised, let's get straight to all the top stocks that we are looking at today. And our research team is standing by with CNBC's TV18's top stocks to track. Let's start off with Rima. Rima, tell us about Vodafone Idea's numbers.
So revenues at 1.7% quarter on quarter was slightly lower than street expectations, but the company met the mark at the EBITDA level, with the absolute EBITDA up 3.6% sequentially. The problem is the company continues to lose subscribers. This quarter, the total subscriber base of Vodafone Idea is down 5.2 million, and this compares with a subscriber expansion seen for its other two competitors. ARPUs for Vodafone Idea expanded by 4.5%, but at 163, it's still trailing Bharti Airtel, which is closer to 250, and Jio, which surpassed the 200 rupee mark in the prior quarter. That said, at the bottom line, the losses have narrowed sequentially to 6,600 crore, and the company upped its capex.
Okay, all right, Rima, thanks a lot for that. Let's hop across to Vinny. She's here to tell us about Lupin's numbers. Morning, Vinny.
Good morning. So Lupin reported a good set of numbers in quarter three. We're seeing better than estimates they've reported in terms of revenues, profits, as well as the margins of the company. Now, specifically in terms of margins, what we're seeing is that they've given a guidance of 22 to 23% last time when they spoke to us in Q2. And this time the margins have come in at 23.5%. So slightly better in terms of margins than the guidance is what they've given. India business seeing a growth of 12% this time, which is mainly led by growth in the chronic therapies. US is performing well for the company. $235 million is what the sales are, which is up almost 11% on a year-on-year basis. Improvement is seen sequentially as well. This is mainly led by the new launches that are there for the company. Also, the exclusivity in terms of generic Pred Forte is something that is supporting the growth. Higher volumes in the base business of the company is seeing good growth for the US side of the company. Also, market shares have improved for Albuterol as well as the other inhalation product as well. So improvement in market share is a key factor. And all in all, good set of numbers from Lupin. We're expecting a bit of green here.
Okay, all right. Thanks a lot for that, Vinny. And SAIL, well, I don't know when's the last time I said it, but sales numbers actually pretty okay. More green is what you'll have to go with on this one. A few factors that played out here. One is the sales volumes number that came in high by close to around 16%, which was better than what most analysts expected on the street. And also, the absolute growth has come on a low base. So keep that in mind. Revenue numbers up by 5%. EBITDA number was down by close to around 5%. And margins compressed by around 150 basis points or thereabouts. That was par for the course, actually. The crucial factor out here in terms of the profitability, one is the operating leverage played out, where you have that good amount of sales volume growth. And the second factor is the employee expense actually came down by close to 7%. So it requires some clarity on that front. The PAT number got a bit of a boost up because of a one-time tax write-back out there. The net debt number as well came down by around 1,700 crores. So going with a tinge of green out here. Volume growth better than expected. The operational performance was fairly decent. And there is some debt reduction as well that we've seen on sale. So that's why green on that one. But back to Vinny. Vinny, tell us about Berger Paints.
So Berger Paints also a good set of numbers. Given that the current market setup that is there for paint companies, Berger has managed to see a volume growth of around 7.4%. So industry-leading volume growth for Berger Paints. Company has gained market share in Q3. The market share now is at 20%. Price cuts were taken earlier. Now, obviously, this is weaker mix as well as higher sales expenses is something that impacted the revenue this time. So revenue growth came in at around 3.2%. EBITDA saw a decline of 1.7%. And margins, a slight bit of a contraction is what we're seeing coming in. But volumes is something that you watch out for because volumes have been quite strong for the company. Their net cash as on December of 377 crores. And the company says that they're very optimistic in terms of the decorative business, the outlook going forward, and expect the volume as well as the value gap to start reducing sometime soon. So keep an eye on Berger. We are expecting a coat of green here.
Okay, all right. Vinny, got it. Thank you very much. So we'll keep it on the radar, Berger Paints. Let's talk about Birlasoft now. Rima's here with the latest. How are the numbers, Rima?
Disappointing set of numbers. The company's top line declined by 1.1% sequentially. They were impacted by higher than anticipated furloughs, especially in life sciences and manufacturing. And the problem is that in the conference call yesterday, the company indicated that Q4 revenues will also be impacted by project ramp downs in certain clients and some extended furloughs. So basically, Q3 was softer than street expectations, and Q4 could also be impacted. The company managed to maintain margins at the EBITDA level at 12% despite the wage hike impact, but profits were down over 8% sequentially.
All right, there's Birlasoft, and by the way, you'll have the management join us a little later at 9:50. You'll hear from them on the road forward. Rima, thanks very much for that. IRCTC and Ircon, it's a heavy list for Winnie today. Winnie, back to you. Morning.
Absolutely. Both these stocks are going to be in focus on the back of their earnings. Now, IRCTC, a good set of numbers. Q3 is normally a seasonally strong quarter for the company. So the managed to see a decent performance this time. A bit of a subduedness in terms of revenue growth in the ticketing side of the business. But other than that, overall revenues have seen around a 10% growth. Margins are at 34% versus 35% last year. So a bit of a contraction in terms of margins. They've seen a good performance coming in for the tourism and rail need sector for the company. PAT has seen a growth higher, mainly this time due to the exceptional loss that was there in the base quarter. So we're seeing PAT growth seems higher this time. So keep an eye out on overall IRCTC. Green is what we're expecting here. Now, Ircon International on the other side, we're expecting red here. A muted set of quarter came in from the company, 11% decline in terms of revenue. Margin seeing a very sharp contraction as well. Order book 21,939 crores as of December. Mainly 78% was railways and 22% was highway orders that has come in for the company. Margins impacted by lower top line growth. Other than that, material costs that has seen more than doubling in terms of versus last year. An increase in terms of work in progress versus a decrease that was there last year is something that is impacting the overall margin. So expecting a bit of red here.
Okay, all right, got it. Vinny, thank you very much for that. Let's go to Vivek. Vivek is watching out for a couple of numbers as well. NBCC and Techno Electric on your radar, Vivek?
That's right. Good set of numbers from both of these companies. NBCC, however, has left itself quite a steep ask as far as Q4 is concerned to go ahead and meet the guidance. But Q3 has been quite strong. Revenues high by almost 16.5%. EBITDA up 22% on a year-on-year basis. Margins also improving to 5% versus 4.8% last year around, and profitability higher by 25%. What aided the revenue is the PMC side of the business that's come to the fore this time around, 2,562 crore versus 2,258 crore on a year-on-year basis. EPC revenues too have almost doubled on a year-on-year basis. Remember, the company had guided for an order win of close to 16,000 crore in H2. It remains to be seen what was the order win in Q3. And the order book at the end of Q2, remember, was close to 84,400 crore. So that is the other key monitorable as far as NBCC is concerned. Expect some relief green on the stock today. However, Q4 requires to be very strong for the company to meet its guidance. Now, talking about Techno Electric, it's a strong all-round growth quarter that the company has seen. Top line growth very strong, almost 96% growth on a year-on-year basis. EBITDA higher by 60%, coming in at the 90 crore mark. Margins too coming in at 14.1. However, on the back of the higher base, I see some margin contraction. Now, profitability coming in at 95.9 crore versus 91.8 crore. Profitability was impacted by a much higher tax that the company has paid this time around at 33 crore versus just around 3 crore last time around. Segmental revenues, look at the EPC revenues, almost 635 crore versus just around 325 crore. Expect some green as far as Techno Electric is concerned.
Absolutely. Vivek, thank you very much for that. EID Parry is the next one. Vamakshi is here with details on this one. Vamakshi, morning.
Good morning, Prashant. The weak set coming in from EID Parry. When we look at the revenue, that saw an uptick of almost 27%, but the operational performance of the company was rather weak. The gross margins contracted by over 1,000 basis points, and this is because the cost of goods sold saw an uptick of almost 46%. The company also this time reported an EBITDA loss of 34 crores as compared to an EBITDA of 8.5 crores, and the net loss widened to 146 crores. Largely, when we look at the revenue growth, that is being driven by the distillery, nutraceuticals, as well as the consumer product segment. The sugar segment saw a degrowth of almost 10%, and the cogeneration business also declined by nearly 33%. What's bad this time around is the fact that the EBIT loss in sugar was reported, and this was mainly on account of lower cane volume, lower recovery, as well as higher cane costs. Sugar prices continue to remain under pressure, resulting in higher loss for the company. The distillery revenues have definitely improved for the company due to better utilization, but the profitability was impacted by higher input costs. So given those factors, going with the red for EID Parry.
Okay, all right, got it. Vamakshi, thanks very much. Let's quickly recap our list of stocks to watch today. The ones that have positive news flow are Lupin, SAIL, Berger Paints, IRCTC, NBCC and Techno Electric. Stocks with negative news flow are Vodafone Idea, Birlasoft, Ircon International and EID Parry.